Hi guys, welcome back with me. Don't forget to like, comment, share, and subscribe this channel. Week ahead, stocks my briefly bunch. Oil sell of could extend Bitcoin to $10,000. After both the S&P 500 and Dow Jones complete their worst week since 2020 on Friday, markets could be primed for a corrective rally when trading reports on Thursday after the Juneteenth holiday. Though the narrative is filled with gloom and doom, and longer-term investor expectations seem to be extremely negative, stock don't tumble in a straight line. Therefore, we're anticipating a short-term rebound within the longer-term downturn. Weak indicates weaker SFX XPX sector. Over the past 11 weeks, the SPX registered its 10th decline as it entered a bear market. The broad benchmark is down 24 or 0.5% since its January for all-time high, sinking below the accept negative 20% level considered to be an official bear market indicator. Why then are we predicting a possible bunch as early as this coming week? When broad sentiment is highly bearish, it increases the likelihood that whoever wants to sell has already done so, leaving demand in chart. Technicians are helping confirm this. The S&P 500 achieved the minimum implied target of its H&S top. The index dropped 5.1% and 5.75% in the previous weeks, respectively. The benchmark is also 4.7% above its 200-week MA, which means there is still room for another similar weekly decline. Note too that significant support such as this often reaches beyond its strict location as traders try to beat each other to the punch. There could therefore be another weekly decline before a likely rebound if we don't experience a short-term bunch this week. Significantly, the decline of all 11 S&P 500 sector simultaneously during the past week demonstrates the aggressive nature of the fall, which also primes the index for a rebound. As well as on a weekly basis, all 11 sectors are lower over the previous month and the past 3 months. The single bright spot is the energy sector, which has been up over the previous 6 months. The remaining 10 sectors are deeply in the trend, with utilities and consumer staples down the less and consumer discretionary communication, service, and technology shares taking the brunt of the sell-off. The yearly view echoes the 6 month view. The S&P 500 entry into a bear market means it's joined to other major US indicators already in slump. The THEV, Nasdaq 100 and the small cap Russell 2000 down 34.2% and 32.25% respectively. Similar to the S&P 500 more recently, the NDX reached the implied target of its H&S top and is about 4% above its 200 WMA after coming within 2% of this key weekly average during Friday's session low. The Nasdaq 100 gained on Friday after having dropped 24.2% from its November 2022 all-time high on Thursday, its week's level since September 24. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe.